It's Monday and once again time to look ahead to what may or may not shake the markets this week in Dukascopy TV's The Week Ahead. Joining me on the line today is Nick Stamenkovic, a macro strategist from RIA Capital Markets. Hello Nick, what do you think investors and market players should be keeping a close eye on this week in terms of data releases and key events?
Well, the key focus in the market at the moment is the fear that the Fed might unwind its pace of QE in coming months sooner rather than later. So any data on the US economy will be the main spotlight. We have the retail sales on Thursday, which should show a modest rebound, and we have the industrial production figures on Friday, which also may show a small increase. And there'll be an important input into the FOMC meeting next week.
An interest rate decision will be released by the Bank of Japan tomorrow. What can we expect from this announcement?
I don't think there'll be any major surprises. Obviously, there's a concern in the market that they haven't sort of put the policy changes across to the investor very clearly, and we've seen a lot of volatility both in the JGB and the Nikkei market, stock market. So the investors will be hoping that there might be some more clarity on that. But the BOJ has already outlined a very aggressive monetary stance, so I don't expect they'll come out with anything new. They said they'll buy bonds across the curve. They've also set an inflation target of 2%, and they're expanding their balance sheet significantly. But clearly, there has been some concern in the markets. They haven't really telegraphed their policies particularly clearly. On the one hand, they said they wanted inflation, JGB yields to fall, but inflation to go to 2%. And clearly that led to a lot of uncertainty, and there's been a lot of volatility in the markets. But if the BOJ did surprise the markets, then that might help to stabilise some of the uncertainty and help the JGB market and also the Nikkei.
Investor confidence in the Eurozone improved for a second consecutive month in June. Investor sentiment index rose to minus 11.6 in June. The latest figure, however, was slightly weaker than minus 11.3, which was expected. Why do you think that this is?
Well, we are starting to see some mildly encouraging signs in the euro area economy. Obviously, we've been in recession for 6 successive quarters, but maybe the second quarter will be the last quarter that we see actual decline or contraction in growth. The PMI surveys in Europe for May were actually revised up. The German industrial production figures are stronger than expected, and we're even seeing signs that sentiment in the peripheral countries is improving as well. So there's increasing evidence that maybe the worst is over the euro area economy, and I think all sentiment indices tend to point in the same direction. Saying that, there's clearly a lot of hard work for the European economy to go ahead. Unemployment is at record highs. There's still no evidence in the peripheral countries that the recent fall in bond yields and indeed record low interest rates are filtering through to the corporate sector and the household sector. So that still remains an area of concern. But it does look like the steepest declines in growth in your area are probably behind us, and I'm anticipating a moderate upturn in the second half this year for the euro area economy as a whole.
The consumer price index for the Eurozone has been forecast at 1.4%. Do you think this figure is accurate?
Well, we had a very sharp fall in headline inflation. That's annual consumer price inflation in April to 1.2%, and that was due to a number of one-off factors, particularly to do with the timing of Easter. That has unwound somewhat in May, and we saw the flash estimate going to 1.4%. So I expect the final estimate will confirm that. But we also have final inflation data from a number of European countries. But given the weakness of the economy that I already mentioned, high level of unemployment and low wage pressures in most countries, EU inflation will remain below the ECB's 2% upper target both this year and probably next year. And hence the ECB will maintain accommodating monetary stance for some time, though I'm not anticipating another interest rate cut in the next few months.
The British unemployment rate is expected to be around 7.8%. What can we expect to see on Wednesday when new figures are released?
Well, I think we'll see unemployment, or the claimant count, which is one measure of unemployment, coming down slightly. And we have seen evidence that on the employment side, that companies turning a bit more cautious. But I don't think there's any signs of a large-scale labour shedding. And I think the labour market as a whole remains quite solid in the UK. Indeed, the PMI services saw last week from the services index in particular, but also manufacturing, jumped up quite sharply. So there is increased hopes alongside the improvement in the housing market that the UK economy might actually strengthen the second quarter. And hence I don't think the Bank of England will be doing any more QE even when Mr. Carney joins in next month's meeting.
And also the UK gross domestic product is due on Thursday. Annual GDP currently stands at 0.8%. Do you think we expect the GDP to have worsened or to have improved?
Well, we have industrial production figures coming out. I think it's tomorrow or this week before the GDP figures. If they surprise on the upside, then there's a possibility that GDP could be revised up. But it's the third and last estimate, so I think it's probably going to be left unrevised. And consequently, I don't expect a little much reaction from the markets. We will get a further breakdown of the UK economy in terms of how different sectors are performing, but I don't think it's going to have a dramatic or significant impact on monetary policy per se. The most likely outcome is Mr. Carney, when he takes over in July, will announce a shift to guiding interest rates similar to what the Fed is doing. But I think the chances of a more QE by the Bank of England are rapidly fading.
And that's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates throughout the trading week. Goodbye for now.